Thank you for joining me this Friday, the 25th of November. I'm Grady for market analyst with Bell Direct. This is the weekly market update. Well, markets have been very difficult for investors to read in 2022, with many factors at play both locally and globally that have caused larger than expected or larger than average stock market moves. Investors also had mergers and acquisitions to think about in a rising interest rate environment. So how did companies and investors navigate this landscape in 2022? The mining deal of 2022 was BHP acquiring OZ Minerals in a deal worth $9.6 billion, which captured headlines throughout the year as mining giant BHP hunted for an expansion opportunity into the red-hot battery metals market. BHP's first offer in August of $25 per share was rejected. Fast forward to November and BHP returned with a revised offer of $28.25 per share, representing a 13% premium on the original offer, and the board of OZ Minerals, or OZL, is said it intends to unanimously recommend the new offer from BHP. Investors piled into OZL shares on the 18th of November when the revised takeover offer was announced, while BHP's shares price only dipped slightly on the news. Then there is the ongoing bidding triangle between Pendal, Perpetual and Regal and BPEA that has now resulted in a court order. Back in August, Pendal accepted Perpetual's takeover offer for Pendal shareholders to receive one Perpetual share and $1.65 per share in cash in a deal worth $2.5 billion. Now in November, a $33 per share takeover offer for Perpetual from Regal and a consortium led by BPEA has been rejected by Perpetual on the grounds of materially undervaluing the company, but has Perpetual on high alert that it's a takeover target and it may be more appealing than the company taking over rival Pendal, which is where the court order comes into play. The New South Wales Supreme Court has now made it a hard task for any potential new bidders of Perpetual to enter the takeover game, after finding that Perpetual would have to pay a $23 million break fee to Pendal if it walks from the deal and faces further consequences if it backs out of the deal. It's safe to say this M&A triangle is one to watch heading into 2023. With a key focus on a greener, decarbonised future, next year may see more big miners hunting down concentrated battery metal producers to expand into the electric-focused future. And investors are watching Nitro Software closely after the document productivity software company rejected multiple global takeover bids in 2022. With hopes of a more stable market environment in 2023 after a turbulent 2022, investors may be more willing to hedge their bets at an M&A buy-in next year. Locally, the ASX rode the global rally of this week, lifting 1.26% from Monday to Thursday, as investor sentiment both in Australia and around the world was boosted by signs that central banks will ease their aggressive interest rate stance soon, and that the RBA is on course to tackling inflation, but that further rate hikes are still needed. Utility stocks soared ahead this week as the winning sector, adding 3.6%, while the technology sector was the only sector to close the week in negative territory over the 4 days. The winning stocks from Monday to Thursday were led by BrainChip, adding 17.05%, despite no price-sensitive news released by the AI tech company. Virgin Money UK rallied 16.67% on the back of releasing FY22 results, and Chalice Mining rose 13.64% this week. On the losing end, investors sharply sold out of Nanosonics shares after Goldman Sachs reiterated its sell rating on the company with a price target of $3.50 per share. Star Entertainment Group shares fell almost 8% from Monday to Thursday, also due to a broker downgrade to a neutral rating. And WiseTech Global fell more than 6% this week. Taking a look at the All Ords, Aurelia Metals rocketed 23.8% and Talga Group rose 18.6%. On the losing end of the All Ords, New Energy Solar plummeted almost 80% this week, while Sunland Group fell 32.9% and Keypath Education closed the week down 21.1%. The most traded stocks by Bell Direct clients from Monday to Thursday were QBE, NAB, Boral, Brambles, Fortescue Metals Group, Australian Foundation Investment Co, and Endeavour Group. Investors also bought into and sold out of New Hope Corporation and Whitehaven Coal, while some investors also sold out of CSL this week. And the most traded ETFs by Bell Direct clients this week were BetaShares Gold Bullion ETF, Vanguard Australian Shares Index ETF, and the Australian Equities Strong Bear Hedge Fund. On the economic data front for next week, investors can expect to gain an insight into retail performance for October, with preliminary retail sales data for October out on Monday, with markets expecting a decline of 1.4%. Monthly CPI indicator data for October is out on Wednesday, with the markets expecting a jump in the nation's inflation to 7.4%. And construction work completed down under for the third quarter is also out on Wednesday. Overseas, estimated US GDP growth rate data for the third quarter is out on Thursday, with the expectation of a jump to 2.6% for the quarter. That's all we have time for today. I'm Grady Wolf with Bell Direct. Have a lovely Friday, enjoy your weekend, and as always, happy investing.